Welcome to Beat the Market, where we do not buy the tip, we buy the dip, and we stay bull in the bull market. We still have this bull market, but boy oh boy did we get this dip. Now look where it fell down to. Look where it dipped to. Right down to our 13-day moving average. We still have the 5, 13, 20, and the 50 all stacked on top of each other. This bull market is strong and it's still going. However, we got the dip today, which caused a lot of people buying puts and becoming bears again. But then again, we've been having that. Let's take a look at the put to call ratio. Anything different? No. People are still betting to the downside in this bull market. Look where it dropped to, guys. Now in a strong bull market, I said many times that it likes to ride the 5-day moving average, but every now and then it'll dip down to the 13-day or just below, even sometimes to the 20-day, and then it bounce right back up. Okay, so I use these 20-day moving averages as my support level. Of course, if it falls down to the 13-day moving average, I will be watching for a bounce. Maybe it'll drop down just a little bit, just like it did over here, just to trick the bears and the bulls or whoever is gonna get tricked, and then move right back up. Okay, so this 13-day moving average does not hold, which is at 432.60. I'll be watching for a bounce over here around the 20-day moving average. Alright, the 20-day moving average also happens to be at the support line where we have this rising wedge. Okay, so remember, under this rising wedge is an area of liquidity where stop losses could be potentially set by retail traders. This support line has been around since March of 2020. So the market makers took a lot of time to set this up. They did get us good with this one over here. So it's possible it comes back down and it happens again. If not, if it does not hold, we have a gap down here, this green area, where we can get a bounce from. Also, the 50-day moving average look like it's creeping up to that level. And if it breaks the 50-day moving average, we have this candle right here, our vector candle, where the institution were doing their manipulating. I want to see if the SPY will come all the way down and test that area before making a bounce. Even if we get a bounce from here, it could look like a double bottom type of pattern. And if it keeps going up, that's still bullish. SPY is still technically trading above the 200-day moving average. Okay, so if it drops down to any of these support levels, it's still bullish, and I would watch for a bounce. All right, it's a lot safer to buy dips in a bull market than it is to try to call a top and short it. Now, there is something I want you to see. I want to talk to you guys about how to spot imbalances in the stock market. Okay, so we got this right here. I'm going to use this. I'm going to set up a square. Boom. So we got this area right here. Right? You got this wick. You got this wick. This happened too fast. The market makers, they go tick by tick, 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 tick. And sometimes when the stock market goes too fast or price moves too fast, it causes an imbalance in the stock market, in the stock price. All right. So this area right here that I just highlighted for you, from this wick, the top of this wick to this wick, buyers were just too strong. Okay. Sellers didn't even get a chance. So what happened? It goes up, tests resistance, and it comes back down to fill this area right here. It's coming up to fill this imbalance to make the market balance again. However, this is a wick, so we did get some volume. I'm expecting for another, more price action around this area tomorrow. Probably test this 13-day moving average, probably, drop down a little bit and possibly head back even higher. Okay, that's possible. We got too many bears. The VIX is still, it's not looking too bad. Let me check the VIX. Here's the VIX. VIX is still trading below the 50-day moving average, guys. So there's nothing to be alarmed about. If the VIX was trading high above the 50-day moving average, then I would probably be a little alarmed. If it's trading above this area right here, we got a double top pattern over here. If it breaks that double top, then I would definitely be alarmed, and we could be heading to a deeper stock market correction. But it doesn't look to be the case. Looks like just a regular pullback, guys. Regular pullback. So do we get bearish at support? I don't think so. I think we should start looking for buying opportunities, good levels to enter. So this was a good level to enter. We had an imbalance over here. Now SPY is looking to fill it, and then we could head back up. If this does not hold, it could come back down here to test this support level, and then we have this whole area of liquidity Okay, I'll show you guys. All right, area of liquidity, because that's where there's money, guys. There's money under under support levels and money under above resistance level. Market makers set those up on purpose. So you can look to enter here. This is a good level to enter if you're still bullish. It's a safer bet. And if SPY continues to go down, we can look to enter around this area of liquidity. If it breaks 428, then I'll probably start getting bearish, guys. All right, but as long as it's above the 20-day moving average, I will still continue to remain bullish in this bull trend. I added to this dip, and if it dips more around here, I will add more to the dip, and I will bet to the upside. All right, like I said many times, July is a very strong month for SPY. We could get some pullbacks in August, pullback in September, October, but right now July is just really strong. Okay, we can get some minor dips here and there, but they're all buy the dips scenarios, if in my opinion. All right, so bottom line, I'm still bullish on a SPY. I say buy the dip. It's at a support level, so buy it. Okay, you don't want to buy at a critical resistant. That's the worst time. Imagine buying that resistant. Now you're crying. Okay, this is where you want to buy when it dips, not the tip. The tip was here. This is the dip. If it dips more, this is a good area to enter around 428. Above 428, yeah, around there. Okay, around there. Okay. Now moving on to triple Q. Here's triple Q. Now triple Q has had this line here for quite some time now. Let me show you. Yep, all the way since May 19th. It's been riding this support line. Oopsies. Riding this support line for quite some time. This is the Fibonacci level. I know there's a lot of stuff. Excuse me. This is the bearish divergence that happened earlier. This was the top here. Then we had the, double top over here, but the RSI didn't get higher than this despite the price action going higher. So definitely want y'all to see that. So remember I said bearish divergence doesn't mean it has to pull back. It can move sideways, choppy, or it can just go even higher, just bigger. But in this case, it's doing a nice pullback, which is fine. This is a bull market. Look what it pulled back to. Take a look at what it pulled back to. All right, first of all, look at this white area. Now I mentioned the imbalance of SPY. There was also an imbalance with the triple Q. Can you see that? This wick right there and that wick right there. So all of this space, there was an imbalance. Triple Q came right back down after setting a double top. Double top. Now this green area is the area of liquidity. There's a lot of money up here that the market makers set up. All right, so it came right back down and it filled the imbalance, and look, it dropped all the way into our area of liquidity. Okay, so the people who try to enter long at this support level, they probably set their stop loss around this area under that white line, that white support line. Maybe they got taken out. Okay, now let's take a look to put the call ratio for triple Q, and here we go. Boom. So we had more calls than we had puts. This is a change. All right. So that can be partially explained why we had this red day today, but that's okay. We filled it up. Let's see what happens tomorrow. I am still bullish because, like I said, we're gonna remain being bullish in a bull trend. It's possible that, let me bring up the moving average. We got a 13. Okay, so this is the 13. 5s all the way down here around the lower Bollinger Band. So if this 13-day moving average does not hold, we still have the 20-day moving average, and this orange line is an area of liquidity because you have this support level here based on the Fibonacci level. It played a role as a strong resistant level before. Now it's acting as support, so it could come back down, get a double bottom type thing, try to fake the bears outlow bear trap and head back up. Okay, now that's if this area doesn't hold. We do have a strong area of liquidity that market makers set up since May. They're not going to set this up for nothing. They want to take us out. So the way I like to enter a trade, I want to see them take out the stop losses first. I don't want to enter when retail traders enter. I want to enter when the market makers enter. So if I see them making this strong move down or even a strong move here, I will be entering. I will be accumulating, scaling around here and scaling in around here. This is what you got to do. You figure out the support and resistant levels, and then you figure out the areas of liquidity. Those are your areas of value, and you look for the good level to enter based on your bias. Are you biased to the upside? You biased to the downside? We are in a bull trend, so I will be biased to the upside. It's just that simple, and you gotta be consistent with it. You guys following me? Okay, so watch out for these levels. Watch out for this level around the 358, 356 level, and also around the 354 down to 352. Below 352, I will be bearish. Okay, remember I'm following Wyckoff. This is a distribution UTAD. Okay, so if we take a look at Wyckoff, UTAD could fall. This is the first drop all the way down to the BC level. Okay, BC level is all the way down at 338. Okay, that's a big drop. If you're a bear and you ride that, or you buy a put, you know, get some shorts, it's a good amount of money, but don't do it just yet, because this is still a bull market. And like I said, watch these levels. This is the levels you want to enter if you're going to be bullish, because that's, you know, these are good dip buying opportunities. This is a bull market. All right, so wait and watch for market makers to take out the stop losses, you know, if they do. And if they don't, if they just keep bouncing, then I don't care. So what? I'm not going to catch FOMO. I'm going to be picky. It has to come to where I want it to come, and then I will enter. I did enter a little bit over here because it did dip under the 13-day moving average. But if it comes down some more, I'll accumulate more, like I said. Okay? So I'm still bullish. Good setup. We got a bunch of people buying calls. You know, so they could try to fake those bulls out, come down to this area of liquidity, fake them out, and then head right back up to this area of liquidity that they set up. All right? There's money. They're not just going to leave that money there. Okay, so overall still bullish. Why? Because the trend is bullish. All right, moving on. All right, I wanted to cover Tesla, so let's go to Tesla. Okay, Tesla is not looking too pretty, right? It broke out here, chop, flagged, then it broke all hearts, filled this gap, then continued to go down, and it came all the way down here and bounced off this support line. Now this support line has been around also since May 19. Okay, very similar to the QQQ. All right, so like I said, they set up these support levels on purpose. That means this whole green area of areas of liquidity. Okay, now I'm also saying that Tesla's following the Wyckoff. This is ST and phase B. Remember, ST and phase B is the move upwards, up close, or maybe a little past the AR level, which is this line right here around 718. Excuse me, yep, 718. That's a different line. So around this level, this area, 713 to 718, it could move up there and come back down. Now we do have this double top, so that means area of liquidity is all up in here. So there's a lot of reasons why market makers will want to push Tesla back up. There's a lot of money for them to take. Okay, there's also a lot of money for them there. So what do you think they're gonna do? They might try to push it down. All right, they faked us out right here. False breakdown. It came right back down this resistance level, which is supposed to serve as support. Broke it down and head right back up. All right, some buying pressure. See the long wick. Now, it could try to fake us out some more and then bring it right back down to this liquidity. I don't think they're just gonna leave all that money there, and then possibly will bounce all the way up. Okay, bear trap down here, then head all the way up, take out this liquidity, bull trap, then head back down. Okay. This is the Wyckoff accumulation that I'm talking about now. Could potentially be this one. So we're around this area on Wyckoff for Tesla. Okay, so I'm still bullish on Tesla because it is technically a bull trend, but I'm not just gonna enter. Okay, I'm gonna wait for my areas, my levels that I want to enter. So I'll be entering around the 626 level or below that, around the 620, 619, the low 600s. Okay, if it comes down there. All right, and if it doesn't come down, then so what? I'm not gonna catch FOMO. It has to meet my criteria. I'm picky. Okay, but overall, I'm bullish on Tesla. Okay, so look for that buying opportunity. Look for that setup. Okay, so good luck with that. Now we did indices, we did a stock. Let's move on to crypto. Let's take a look at Bitcoin. Holy moly, Bitcoin, how's it going? So Bitcoin has been it's so bearish, trading under all our moving average. Okay, now in the past, in a lot of my Bitcoin videos, I talked about that it's following the Wyckoff. This is the one I use, and that we should be in the end of phase C, heading into phase D, which is supposed to be very bullish. Right? Okay, I think we're this one. If we're gonna follow it, is schematic number 1. Okay, as you can see, the spring, the test here, which is where I entered, I accumulated more. Now it's coming right down to our support, okay, to our ST level. Look at that, okay? But I also think that it's a possibility that Bitcoin is actually in phase B. It's a possibility that it's in phase B and we are at this dip over here. Now look at this dip is supposed to be around the ST level. Where's Bitcoin currently? Bitcoin is currently at the ST level. We had a bounce here, bounce there, bounce there. Okay, so like I said, market makers, they like to set this up on purpose. Okay, all this green area is area liquidity. There's a lot of money there. Area liquidity here, there's a lot of money there. Okay, so we look at wick off, expecting to bounce all the way back up to the AR level. Okay, we got a lot of bad news right now. The fear in Bitcoin and the whole crypto market is just ridiculous. All right, but like I said, we don't get bears at support. Okay, we are at a very critical support. We could get a possible triple bottom here. If not, they can set up the triple bottom. All right, there's gonna be a lot of stop losses here. Boom, they take it out and then just move right back up. Okay, bear trap, come right back up for the bull trap, possibly head back down. But if it keeps on going up, then there's the possibility that we're following this one, the spring test. This is the end of phase C. But right now, I'm going to lean more towards that we are in phase B still, and we're gonna move up soon, I think. Okay, look at that, look at it. ST is following wick off. Still, they got us feeling bearish. Market makers, the whales, they've been accumulating. If you watched my previous video, I've showed you evidence, guys, charts, evidence that the whales have been accumulating. Okay, now all I hear is bears, 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 but I'm not gonna be bearish. Okay, so this is the good time to buy if you entered at this support level. All right, so this is a good level. If it breaks this level and enter my green area, which is around 31k to 30k, all right, this area, I will accumulate more. Even if it gets down to this level down here, I will accumulate more. This area is liquidity. Okay, so with all these whales buying in, I'm buying in too. All right, so I'm still bullish on it. Like I said, it's still following the wick off. I think it's over here. ST, look at that. It's just perfect. It's just, look at this one. Look, this one look better. See that? See? All right, guys. So I hope this helped. I hope this was able to give you some good ideas, give you a good view on the stock market, the crypto market. All right. So I hope this help you calm your nerve and continue to beat this market. See you soon.